YouTube, what's going on? Welcome back to the channel and welcome back to the PJ review series where I break down my real-time trades that I take with my members and give you guys the sauce here on YouTube as to why we took it, why we didn't take it, why we got stopped out, why we hit TP, and just really give you guys insane value here on the channel. The only thing I ask in return is to please like, subscribe, and just drop a comment if you're enjoying this YouTube series. Honestly, I think that when I started trading in 2016, I wish there was somebody doing this because I would have been able to cut my learning curve in half. And that's my goal for you guys here today. So we are going to look at a trade that we took on Tuesday, October 14th at around 10:45 in the morning. And this lesson today is going to be very important on how to use new week opening gap because a lot of people don't know how to use it correctly. And I'm going to show you how we used it. And then how we found a trade off of it once we got the confirmation from that area. So let's get on into it. TurboTax presented by Tostiatos, the chip company. Okay, so here we go. This is again Tuesday, October 14th. And this market is really trending downward. We can see this market is just trending downward here. And actually, this is a big move from Monday, October 13th. We actually moved down 592 points. And if you guys have been trading, you notice the markets have been pretty volatile. There's been some really good price action lately. Really a lot of volume, big candles. So you got to be really careful in this environment and know what you're doing because this is an environment that is not for new traders, honestly. This is for very advanced traders. And you got to be careful. So, let's kind of talk about what happened here this day. So market's trending lower, right? Lower lows, lower highs, lower lows. And then we get like this explosion and V-shaped recovery out of this zone down here. So let's look at what this zone actually is. And this is where new week opening gap comes into play. So for people that are just learning and not understanding what that even is, I'm going to break it down for you guys today so you guys can understand it and take it and use it in your own trading. So on Friday, we're going to move over here now and kind of switch gears. On Friday, October 10th, we had a massive sell-off in the market, right? This was the whole thing with Trump, and this was the 100% tariffs on China and the back and forth trade war game. So we get a huge sell-off. And then on Sunday, October 12th, when we open back up, we get a huge gap. We get a massive gap. This is what we call new week opening gap. So you could see here, and honestly, if you guys do not use this little tool, I'm going to give it to you guys here today. Go on to TradingView, go to indicators, okay? And then look for ICT new week opening gap / new day opening gap. And it's by Lux Algo, okay? You guys are going to put that onto your charts and then open it up and follow along with me, okay? And then here are the settings for the tool. So you could show new week opening gap or you could show new day opening gap. I use new week opening gap a lot. I don't really like using new day opening gap. I think it's just too much noise. But new week opening gap is definitely something that I've back tested over the years that is very accurate. Like a lot of the times the gap gets filled and it's very accurate. So I use new week opening gap. Input looks like this, style looks like this, visibilities are all the same. So not much to do here with this indicator. So what you're gonna do is put it onto your chart, show it, and then it's gonna literally draw green lines here. So you can see right here is the new week opening gap, top of this new week opening gap, which I have marked. And then here's the bottom of new week opening gap. So this creates a massive gap here, okay? Huge gap. Now, in your own back testing and studying, I want you to kind of look at how price reacts to these zones. You can just see it on the chart. This is an old new week opening gap up here. Look how the market comes back up to that 25,000 level and then rejects. So you can use new week opening gap for a lot of things. I mean, look at this here. New week opening gap, right? In green, market, makes a huge gap. October 5th is where the gap is made, and it doesn't get filled until October 7th. But it fills, and then watch what happens. It bounces from the zone and goes higher off the gap. So go back, play around with it. You're going to notice there's a lot of accuracy to new week opening gap. So this is how I like to use it. Okay, it can be used as support and or resistance and or draws on liquidity as well. So this market comes all the way in to new week opening gap down into here. And it just basically misses the middle of new week opening gap, like just by, let's kind of measure it out here, about 60 points from the middle. So we don't get consequent encroachment of the middle, but we do come down, touch the gap, and then go. All All right. So I want you guys to notate that. I'm going to shut it off because it's a little bit spammy for me, but I like to just draw it like this. Like I know that new week opening gap is the top here and the bottom here. Now, market comes into this new week opening gap and we get an insane V-shaped recovery, right? Insane V-shaped recovery from here. And now I'm like, okay, I'm starting to get interested. Now the market's been trending lower, but now on Tuesday, October 14th, it looks like we found some bottom and we get a V-shape out of the zone. Now we're going to drop down to lower time frames to kind of look at what models we're presenting. And then I'll show you what we did. So down into here, there are some opportunities, but we end up not taking anything, and that's completely fine, right? The reason that we faded this is, honestly, I don't love taking like an early rotational play like this, especially when I have to flip so many bearish gaps to the upside. So like, yeah, I could have taken this 1 minute breaker here that ends up working beautifully, right? But I'm not a big fan of like front running higher time frame gaps. So here's a 5 minute gap right here. Front run, and here's another one. Okay. What I like to do is, and this is where the patience comes in, is I like to make sure the price actually is going to reverse here. I want to see these 5 minute gaps go inverse now to the upside. Okay. I want to see these gaps actually be disrespected, right? And bullish order flow take over. And that's exactly what we do, right? Even on the 15-minute time frame, there's not much to work off of. There's one 15-minute gap here, okay, which is the first presented gap on this leg now, right? This is a manipulation leg lower, and then we reverse this, and this goes 15-minute inverse. Okay, now things are starting to look good, right? Like we're inversing gaps, we're V-shaped recovery, bullish, bulls have control here, and I'm still not even in a trade, right? And I can feel it, man. I can feel the heat from the Discord. Oh my God, we missed 300 points. Like, what are we what are we gonna do now? I mean, 321 points, dude. I watched this thing go 321 points, and that's hard as a trader, man. That's where the patience comes in, the discipline, the years of chart hours comes in, because I'm like, guys, I've been here before, man. I've tried to take this trade down here, and I've got slammed for lower. I have seen this move happen before where, yeah, it looks great, and then it rejects out of a 5 minute gap, and we go lower and make a new lower low. So I like to get confirmation, right? That's taking my edge. I'm playing into my edge here. The confirmation is flipping this gap, going 15-minute inverse, and now I'm like, okay, beautiful. We have something to work off of here. Now, breaker people, this is also a bullish breaker gap here and a change in the state of delivery. So you're getting everything that you want here now, right? We're getting everything we want in this zone. Bullish order flow, inverses, breaker, change in the state of delivery. Now, pause this. Everything looks good, right? From bullish order flow perspective. Here's the key to the puzzle in this trade, and you have to understand this moment, man. Take notes, get your journal out, because if you don't understand this part of it, you're never going to understand why I do what I do or how I trade. Look at London High. I want you guys to draw your attention to London High. You see how the market didn't take it yet? Now, if the market would have ripped through all these zones and taken London High, I probably would have signed off for the day. That was my draw. That is going to be my draw on liquidity. If I don't have that there anymore, I'm likely not interested really anymore. But they left it, right? They left it. And that to me is exactly what we want to see to get involved in the trade still, right? We need to have a draw on liquidity. If we have no draw on liquidity, we really have no trade, guys. That is like 90% of trading. I'm telling you, if you can get the draw on liquidity correct, you're going to make money in this market. Okay. So the 15-minute looks beautiful. 15-minute breaker, V-shaped recovery, multiple inverses on the way up. And now I'm trying to get involved in this trade idea up into London High. Like that's still going to be my draw. Again, I've sat here now for, let's see, 9:30. We can just, this is where patience comes in. 9:30 in the morning, right? To right around 11 o'clock. It's an hour and a half of watching the market move that much, man. This is what trading is, dude. It's not flashy. It's not yachts, cars, Lamborghinis. It's boring. Like this is what trading looks like. Boring. We stay here for an hour and a half, right? We're not involved. And then we print this beautiful 15-minute, what I call breakaway gap, right? 15-minute bullish fair value gap, buy side inefficiency, sell side imbalance. Okay. So The market puts that in, leaves the London high, and now we're looking for a model, man. We've set up everything. This looks great, right? We're looking for some sort of model out of this zone, okay? So the market comes down into this area, and we're tapping that 15-minute fair value gap, okay? There is now, I dropped down onto the 30-second here because I really need to find some sort of inverse play or something that I can take out of here. Yes, you could turtle soup out of here. I don't love turtle souping. For people that don't know what turtle souping is, you can literally just get an entry right here, take a buy order, right? And then run the stops below here for like a 36-point stop. I don't love doing that. I've been burned a lot trying to turtle soup out of a gap like this. So what I'd rather see is the reaction out of the zone, okay? The reaction out of this 15-minute gap here, and then a lower time frame model, which should be an inverse, breaker, unicorn, something like that. And that's what we end up getting here. So we end up getting a little inverse right here on the 30-second time frame. Okay. And now I'm looking for, we are actually in the trade here. Let me bring this back. We take a little bit of drawdown, actually. So we get this inverse. And guys, drawdowns, it's normal. Like drawdown's fine. Like it's going to happen, right? So I end up running stops right below that swing low there. Okay. Which is like a 32-point stop. And then we get this beautiful 30-second inverse. And we are targeting, I believe we are targeting, I'm still targeting this London high here. Okay. Still targeting this London high here. Now, this trade is about a 1 to 4.9. Okay. But we end up getting a little bit more out of it. I believe I end up getting, let me just double check here. 775 is where we end up getting out. 775. Right here. So it ends up turning out to be a beautiful 2 to 2.4 RR trade. But watch this stop placement, man. This is really where the expertise on being able to place protected stops is. So right below this low, we go inverse, we enter the trade, right? And then we take a little bit of heat. And then the market displaces beautifully right up into our zone. And we are all out right here. Let me see. Yeah, so 768. Sorry, I had that marked wrong. And we take a full exit right here. Now, why do I take an exit here? Why did I take an exit here? Well, this is where you have to understand higher time frame fair value gaps now as well. Okay. So if you look here, we are in a 4-hour bearish gap. So I was targeting the London high, which I knew, if I delete this bar here, which I knew coincides with the London high and then the 4-hour fair value gap here, which is a bearish gap. And we know that the order flow right now has been to the downside. Okay, so I am out there. I do not want to play around with that higher time frame gap because I know it's going to be high resistance and it's likely going to be a zone that pulls back from. And that's exactly what ends up happening is the market ends up pulling back from that zone. We just replay price back up to where we took it. Boom. And we take a full trade up here. And we're all out for about 66, 67 points on the day. Just literally using this 15-minute fair value gap as a continuation, really. A continuation of this trend, right? You get all the factors, the V-shape, the change in the state, the breaker, okay? Excuse me. And then we leave London high. When we leave London high like that, that's when the continuation models or any model really from delivering out of a PD array like this really works well. So yeah, you don't need to force trades, guys. If it feels like the market's leaving without you, there is going to be another opportunity. That's the lesson, man. That is the lesson, is be patient in your trade setups, right? Again, if this London high got taken right here, this trade would have never even been taken. It would have been invalidated. But it's instead, market leaves it by a couple points, comes back down into a 15-minute gap, which is one of my favorite gaps to trade out of, prints an inverse, we take an entry, and we slam it for 67 points. So there's a lot going on in today's lesson. Again, new week opening gap down here, giving us that bullish order flow out of the gap, the V-shaped recovery. Again, draws on liquidity, man. Draws on liquidity. Make sure your draws on liquidity are drawn, because if you don't have this stuff on your chart, you're not even going to know to be taking this trade. Like if you didn't know London high is here, you would have never even seen this opportunity. But just having it drawn simply on the chart and marketing it like this, we know that London high is leaving a lot of orders to desire for the market, and we're going to take a trade into that draw on liquidity. So that was the trade, guys. Beautiful 66 points, and it ends up delivering Let's see how long it took us. About 12 minutes, man. A little like 13 minutes. And we end up banking like 15. Oh, excuse me. This just traded me like $2,400. So really, really clean trade. One and done for the day. And that's what it's all about, guys. That's what it's all about. Don't chase the market. Let the market set up for you. There's going to be another opportunity. Listen. I know you guys struggle with this. I know this is a struggle for new traders. I was there. There is always going to be another opportunity. Don't chase price. It will save you so much money. Just by me saying this to you, let price come into your key zones and let it come to you, right? If you can eliminate FOMO and if you can eliminate tilt trading and you can eliminate all these emotional factors from trading and become a robot in a way, you are good. You can make money doing this, right? I do this live in front of a lot of 1,400, 1,500 people every single day. I'm on a 22-week win streak trading the same stuff I'm teaching here on YouTube, right? So you guys can do it, man, but you got to put the work in, you got to put the effort in, and you got to be super disciplined in your trading. Guys, I love you guys as always. Just do me a favor, drop me a like and comment and subscribe to the YouTube channel, and I'll continue to bring you guys real-time trading from a real-time trader who's been doing this for 10 plus years. So I love you guys. Thank you so much for the channel growth, and I'll see you guys in the next video. Peace.